Welcome to Gold Silver Pros.
What do you think it's meant for the BRICS nations to form their own currency, as Russia said that they were doing, their own challenger to the dollar
Yeah.
in all of the trade agreements that they've made? What does that say for the long-term viability of the dollar in your eyes?
Well, I don't think it means the end of the dollar. It just means that there will be less demand for dollars.
Mhm.
And I get a lot of comments. Well, these BRIC countries, they're dictatorships, they're like third world countries. That may be so, but if they don't use the dollar to buy their imports, they're going to be using something else. And even if they are dictatorships or not as developed or advanced, they're still not going to, they're going to decrease the amount of dollars they use. And I think in the past, countries have tried to do that, like Iraq and Libya, and we know what happened to them. But now the BRICS are becoming, they are powerful nations, and it's very hard, I think, for the West to just punish the BRICS. And we've seen recently that even Saudi Arabia, according to I think to the South African president, said that they're thinking of joining. So yeah, the dollar will still be around, just like the pound still around after being the reserve currency in the 19th century up to in the run up to World War One, but it's a lot weaker and not as significant. And I think the same will be for the dollar. But what it will mean for Americans is that everything's going to be more expensive, the things that they need to survive on. And it could be a good thing in the long term, a blessing in disguise. It means that Americans will have to start producing things and exporting them to earn their way in the world, because with the reserve currency, they've had that term, the exorbitant privilege, just to print the money and buy whatever they want, while other people have had to earn their way.
Yeah, that's a good point you bring out about the U.S. Whoever has a dominant reserve currency tends to have basically pricing power in the market and eventually moves to more service-based economy. There have been some whispers of bringing manufacturing in particular back to the United States in political circles. Even in the liberal parties are beginning to recognize that that would support the dollar a lot more than what's going on. So I think they haven't typically come across as being the wisest of the two political classes fiscally, but I think even they're starting to get it just a little bit. So I do think we're going to go through some pain here in the U.S. before that happens, certainly, as we unwind, this beast that we have created with the system. And at the end of the day, given all the pain that's going on across the world, I ultimately think Americans are going to take the most, just because we're going to lose the benefits that we had with that dollar. And Mario, you can start to see this around. You can start to see businesses failing. You can start to see infrastructure aging. It reminds me of when I read about the fall of Rome and how that just gradually occurred, how our infrastructure started failing. The values of society had changed quite a bit. It wasn't quite as cohesive. I feel as though that's what's going on in America right now. I don't know how you feel out there, but I suppose Europe is probably going through much of the same thing as well that we are.
Yeah, I think Europe has been a much longer decline. I would say since World War One. It's been unfortunate. But yeah, I haven't been to the US in a while, but I've noticed I read about it a lot, and I see videos about the infrastructure. And actually, in the EU, I'm not in the EU anymore, being in the UK, but I went to Madeira, which is a Portuguese island off the Morocco in the Atlantic. But even there, the infrastructure was great. 180 tunnels, really good motorways or highways. And I spoke, one of the guys who drove us around said, well, it's been the EU that has given Portugal all the money to build this infrastructure for the last 30 years. So there has been some of that here. And I think the US, unfortunately, has been too focused on fighting wars, and all the trillions that should have gone into infrastructure have been wasted in places like Afghanistan and Iraq. And I guess the military industrial complex has benefited from it, but not the American public.
What are your thoughts on the middle class? I know your recent comments have been the middle class basically is eroding away, and I think that's what a lot of us feel. But you mentioned there could be good things on the other side of this, and we go through the financial reset. Do you suspect that the middle class will be making a comeback after we get through all of this mess, or do you have a view on that?
Yeah, definitely. They should make a comeback, but it's not going to be overnight. And I think the closing of the gold window in 1971 had a big impact on that. And yeah, because it diluted average workers' salaries, and it still does. It's helped just the top 1 or 10%, really. Even the Federal Reserve has really good data on that, on the distribution of wealth in the U.S. And you look at 1989, I think it goes as far back as 89. The top 1%, they have a lot more wealth now than they did then, and the bottom 90 is stuck just below 4 or 5%. And but yeah, I think yeah, things look bad right now, but I think the way things are turning, eventually it can only get better. You know, I'm not a pessimist. I just try to see how things are. And but the middle class will have to they'll have to work hard, you know, but hopefully they'll have all the better jobs will come back to the US, and it might, because if the dollar goes down a lot, you could see some foreign investment coming in, and yeah, making it worthwhile for people to start building factories and other things in the US.
Do you think we're witnessing the death of the middle class?
Oh, I think we have been. Yeah.
I know it's been
and
shrinking.
that started really back in the 90s. You know, there is no level playing field. Amazon came out and Wall Street made sure that they had plenty of money, so they did not need to have any profits. Well,
Yes.
I know people that used to own stores, right? Mom and pop shops. That was the norm when I was growing up. And, you know, they have to make a profit or they can't stay in business, right? They had to charge taxes. Did Amazon have to charge taxes? Nope. So they let that play until they essentially forced any of those mom and pops either out of business or to work for them. And now they're charging taxes.
And now they're roboticizing their workforce. So a lot of these people that went to work for them at lower paying jobs, maybe even without benefits, don't even have jobs anymore. And I know I live in Grapevine, Texas. I have a big Amazon fulfillment center about 3 minutes from my house, because North Texas is where they put a lot of warehouse space for the retail sector. It's a big hub. You got DFW Airport, 5 minutes down the road, it makes sense. Well, all the announcements coming out of Amazon are, we're becoming more efficient, we're laying off our workforce. And yes, they're hiring seasonal workers for Christmas, but it's a 2-month job. But the regular jobs are being replaced by these robots that run around and do fulfillment.
Right.
And the interesting thing about Amazon, to edify your point, the only part of the company that really makes money is their cloud services. The retail store has always been a loss leader. And it makes sense now, in light of what you said, why they're doing that, because if you can put a bunch of small businesses out, and I think COVID did this too, COVID knocked out the restaurant industry, I think.
Yeah, absolutely.
Then at that point, what you have is all of this business sitting there, and the big corporations can go grab it, right? So isn't this like corporatization of the economy? The big companies are saying, thank you, I'll take this.
Oh, 100%. And we've been watching and experiencing the financialization of everything. Everything has been turned into a trading product by Wall Street. You know, even real estate, which, you know, I mean, look, the Fed created this ginormous bubble, but since when do you buy and sell a house every single day, right? You don't. So they allow all of these mismatches. They do pick winners and losers. And that's why I really strongly believe that everybody needs to be as independent and self-sufficient as possible going into the mess that should be obvious. We're already in it. I mean, they used to say to me, Lynette, you can't say the reset that's already started. And I'd say, but it's already started.
Right.
It doesn't matter that nobody else sees it. I've been studying currency and currency life cycles since 1987. I see it. That's your job. That's my job to let people know what we see. And it doesn't matter if nobody else thinks that.
And a lot of people tell me don't get into numismatics, it's high premium, that type of stuff. And I said, no, I think there's value there. And I think numismatics are times when they even do better than regular gold. So
they are right now.
They are right now. And to that point, I just wrote an article where I had sold back to ITM some of my pre-1933s to fund a move I'm going to be making. So perfect timing. I mean, the gold had value. I needed it. It was perfect. I made a lot of money on the numismatics over 4 years. In fact, it's the best performing investment. It did better than my farmland. It's done better than my regular bullion. It did better than some of my rental properties that I used to have sold out. So it has been my best performing asset over 4 years. Why is that? Why are the numismatics doing better than the regular bullion? And do you think, Lynette, that will continue?
Number one, yes, I do think that will continue. And number two, you know, we knew that gold was in a long-term positive trend. So that's the right church. Now you got to get into the right pew. And again, it's hard for me to imagine after they've been confiscating my wealth since 1954 that they're going to suddenly stop at the end. Right. So when I'm making choices, you know, it's always, I want to look and see what are the big kahunas, what are the big players doing for themselves? So I like to look at the rarity index. And the rarity index, I mean, those coins in there, you know, you might have a coin, 1 ounce of gold for like $8 million or more, 15 million. Now, who can afford that? Only the 1%, right? And these are also the people that either write the rules or have the ability to influence those that write the rules, but they are more in the know typically of what is going on than the normal Joe on the street, right?
Yes, I agree with that.
Right. So if you look at the graphs on that, what you're going to see is a huge breakout in the really rarities. So that means that what that means is that very, very wealthy people are buying in big, because it's really a huge breakout. On the lower level stuff, that's more what like you and I would buy. There has been a breakout. That breakout is growing, but it just recently started. So the smart money was already there. And so, yes, I do think it's going to continue because the big money, that's where they're going. And where else are you going to go? I mean, honestly, you know.
So Lynette, so part of your strategy is engaging numismatics. Why numismatics over bullion? I think you hinted at it before with taxation and things, but why numismatics? Because the reason I want you to answer this is everybody tells me, don't do numismatics, it's high premium. I'm like, it does. What matters is the value you're going to buy and sell for. It's like real estate. I know I make money in real estate when I buy it, not when I sell it, because I've done my research.
Exactly.
Numismatics, I think, are the same thing, aren't they?
Exactly. They are the same thing. And so when you're looking at what those premiums are, they're not as low as they were. You know, 4 years ago, you were probably buying it at pretty much the most compressed that they were historically, right? So that's why you did so well. But that premium is growing. The biggest reason, I mean, so that's one of it. And that's one of the reasons. And you're looking at things that are super rare, even in the common dates. Compared to how many bullion coins they mint, they're still super rare.
Yes.
And it's always, it's a true demand and supply market, you know, but honestly, the biggest reason, it's not even the taxable, because all good citizens should always pay all taxes that are due, though these are not reportable. So you get to choose how you want to handle it. But it really is about a potential confiscation. I mean, It's not like it hasn't happened in this country more than once. Last time was 33, but manipulating, and we talked about Greenspan coming out and saying, well, what if we just kind of tweak the gold price a little bit? That would have an impact on psychology. So why are they trying so hard to keep people away? And I don't know, and this is not something I can exactly prove, but what I would say is I think it was a coincidence, or not a coincidence rather, when the Bitcoin came out in January of 2009 and quantitative easing came out in March of 2009. And so a lot of the wealth that would have gone into hard asset gold went into cryptocurrencies, right?
Yes, it did.
So
big time.
Big time. So, you know, I mean, mission accomplished for a minute, but I think the premiums will get bigger and bigger because of the scarcity factor. And also, I want to be in the same category as the guy that pays $15 million for an ounce of gold.
Sure.
I don't have to do that, but I want to be in that category.
Yeah, and so those are really good points. Last question, I'm going to leave this open-ended for you. You talk about a lot on your channel. What to you, other than SOFR and that system, what to you in the next year is something that people need to be aware of that maybe they don't know, that maybe they could come to your channel and learn about? What do you think is another big factor that people just aren't talking about, but they need to be aware of?
Well, it is a completely, I mean, they've stated it over and over again. You will own nothing and be happy. Well, if you hold your wealth inside of this fiat money system, it is so much easier to take away from you. And who can you call? Who are you going to complain to? So I think it's critically important to understand that the reset transition into a completely new social, economic, and financial system is well underway. And I think that coming into 2023, there will be a huge crisis. And so you want to make sure that you are as independent again and secure. So we have another channel, BGS, Beyond Gold and Silver, to help you make sure that your food, energy, food, water, energy security, barterability, wealth preservation, community, and shelter, that you are secure in all of those areas. Because if you're not, it's going to be much harder for you, and you're going to be more dependent on the system. And let me tell you, I don't think anybody should be dependent on the system at this point, because you know, then you're forced to do what they want you to do, whether you really want to do it or not. You have gold and silver outside of the system, plus plenty of food, water, etc. They want you to do something? No.
Yeah. Lynette, it's been an absolute pleasure having you back on. I wish I could talk to you for hours, but I know, you know, we both live busy lives doing content. If people are interested in ITM trading and they're interested in some of the products, how do they go about getting access?
Well, we're easy to access, itmtrading.com. We also have a YouTube channel, and we're on BitChute. We're on all those other channels. We've got podcasts, so it's easy to find us there. BGS, which is a website as well as a YouTube channel, and they can call, because we actually like, as you well know, we like human contact. So 888-696-4653. And we have consultants that have been fully trained, as you've experienced, in the strategy, which, again, just a repeat of history. So, or you can find me by my name, Lynette Zang, Z-A-N-G. That's pretty easy too.
Yeah. And I think we have a lot of crossover between our audiences, but in case nobody's ever been to your YouTube channel, I fully recommend it. There's so much information there. And if you just want all the stuff that Lynette studies on monetary history, basically is put on that channel. So if you want to understand what she understands, all you have to do is go and watch the videos. It's all laid out there. Thank you, Lynette, again, for joining the program. I appreciate you doing that with your busy schedule. Oh, it's my pleasure. And let's not wait this long. Oh, we won't. And you'll have to come back and see the changes. There's a lot of changes in 4 years. Well, I think, Lynette, I've dubbed this the period of the quickening. It's after the Highlander movies. But what I mean by the quickening is it's kind of like the 11th hour to the 12th hour.
Yep.
If you go over that analogy of filling up like San Francisco Candlestick Park with a drop of water and it doubles every second or whatever it is, most of the water gets added at the very end. And I think that's where we are. All the stuff is like accelerating so fast that we really need, you know, to talk more often about this kind of stuff. So I definitely will take 100%. You up on that. I wanted to add in a piece of research. One of my followers had done. Daniel Bogario is a registered chartered financial analyst. He works in London, was a director of a company for a long time, and has done a lot of financial statement analysis. And my background was I used to be an auditor. I was a technology auditor, but I did a lot of financial and business statement auditing for KPMG, Ernst & Young, Verizon, a lot of other big companies here in the United States. And so we, having both a CFA and auditor background, kind of have this ability to dig into stuff and kind of figure some stuff out. So what we had done last year was the Perth Mint, which is basically a government-owned entity in Australia, and so therefore have financial reporting requirements, puts out every year their financials. And Daniel, you know, got a tip to go look at them. Somebody said, just go look at them. So he did his financial statement analysis. I won't bore people with the details, but his analysis, which he put on a spreadsheet, and we covered over 5 videos on our channel in detail, showed that Perth Mint was about 920 or 930 million Australian dollars, had a receivable for that amount. And what we figured out we think they had done was taken customer money, bought the metal, but lent it out to a major counterparty. Now, this story was picked up by 𝘃𝑗𝑀, and the CEO at the time went on 𝘃𝑗𝑀 and was defending that, saying, well, we actually have it. It's work in progress. And work in progress is metal that comes in and hadn't been refined. And I'm like, there's not $1 billion of metal in your work in progress. That's ridiculous. And so we think what they were doing was they had lent out, and they had, in fact, created a receivable on their balance sheet with this metal, meaning somebody else owned it. And they were receiving money for having lent it out. So basically like a lease rate, if you will. Anyway, long story short, they start to unwind this position. And as of last year's financial statement says 300 million. And then as part of this, they had an ETF, and they sold the ETF to Goldman Sachs. And what I'm getting to is, you were talking about ETFs and redeeming. When Goldman Sachs got this ETF from Perth Mint and bought it, they immediately, according to the news story I saw in the press, removed redemption for physical precious metals. Now, I don't know if they've reinstated that, but as soon as Goldman Sachs got this ETF from the Perth Mint, who we knew had lent out the metal, some of which we believe was flowing to the ETF, Goldman Sachs said, you can't redeem shares for metal. So I'm wondering, Ed, if this contagion seems to, of lack of available metal, has stretched out to some of the big places like Perth Mint. And I think that's just another sign that we're really short metal, that they're trying to make it appear as though we have more metal than not. And I know you haven't watched those video series, but it seems to be another sort of nail in the coffin of the argument that there's a lot of gold and silver available. I didn't know if you were aware of that at all, or had any comment on and done anything on any of the bullion or the mints, and seen what had been going on there.
Well, Robert, I'll tell you the truth. I did watch some of those videos, and I am aware of it. I have a general ballpark idea of what you guys were talking about.
Yeah.
And we're talking exclusively about silver here, but the shortage in gold, I would suggest, by what we're seeing out there, is that we're starting to see signs of that as well. So let's not forget gold. But the big story about Perth Mint and 𝘃𝑗𝑀, since you brought them both up, is something that Ted Butler's been on for more than 20 years ago. He wrote articles about this, and about 17 years ago, he wrote another one recently last year about these sales of phantom silver. You can buy these. What are they? I can't remember what they call them, but you can buy these. You buy the silver, but you don't actually own the stuff. Okay, and nobody knows for sure how much of this phantom silver that 𝘃𝑗𝑀 or Perth Mint have sold. And but there's lots of it out there where you can buy it at spot. It's unallocated, and Ted figures that's the biggest scam out there with the Perth Mint. And of course, you mentioned this other thing with your friend that did the auditing. I'm not discounting that. I just don't know enough about it to make a comment on it.
Yeah.
But there's lots of other smoke flying around the Perth Mint right now, and I'm pretty sure that if once they do some digging, they're going to find a lot of stuff in there they're not going to really like.
Would it be, and just asking your opinion on this, would it be safe to say that if we were looking at the gold and silver market from start to finish, when we pull it out of the ground to the point at which it goes to a retail or industrial sale to someone, would it surprise you if at every step along that way there had been a bunch of double counting or rehypothecation or covering up of actual physical supplies? I mean, if it came out there's a big scandal on gold and silver across every step of the supply chain, would that surprise you at all?
Well, I'll tell you what, you're talking of a whole thing that, I know I know something about.
Yeah.
The mines produce either the ore or the doré bar, which goes to the refiner, and they refine it into the metal. Now, I doubt very much, but I don't know for sure, so don't quote me. So nobody take me as this is gospel. I doubt very much there's much hanky-panky going on up until the time it's actually refined into the physical product itself. Once it gets to that point, then, well, all bets are off. But, the physical market is totally different than the paper market, and I think that's a differentiation that has to be made. The fact of the matter is that, as we started at the top of this show, the physical silver market is in a huge deficit. The demand is way, way more than supply. And when we start to see problems in the silver market, it's going to show up in the paper market where, the thing is going to finally blow sky high. So one of these days, the physical market will trump paper. And as you and I and everybody else in the world, that's the day that we're waiting for.
We've been waiting a long time, Ed. I've only been doing this for 13 years. It's not near as much as you or Ted Butler or a lot of these, other people. I'm guessing a little bit younger generation than you guys. But trying to pick up the torch a little bit and tell the story. Has it surprised you how long this story's been going on before it seems as though we're getting to like a squeeze condition or a shortage condition in silver? Did it go on longer than you thought it would? And do you think it's still got some ways to run before we see whatever the resolution is going to be?
Yeah, well, as Ted has pointed out several times over the last couple of years, this thing has carried on far, far longer than even he expected that it would, because he's been at this, and like you said, for, very close to 40 years. And for a price management scheme to go on that long, it has to have some official cover behind it. And as to whether it's going to come to an end or not, it appears that from the COT data that the big commercial shorts that have been sitting on the prices of precious metals for several generations now are clearing the decks for higher prices. And Ted's been following this since forever. And it really started to come to fruition at the moment that the LME nickel market broke. And from that point on, the price has been going down, 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 down. And that's because in order for these big commercial banks to get out of the short positions, they have to rig prices lower. Get the managed money traders to go short against them. And that's why we've been going through all this price pain from that time and up until last Friday. So the fact of the matter is that it looks like the banks, the critical banks, are clearing the decks for a big move higher. And like I just said, we're all waiting for the day when we see that finally they've given up the ghost and don't short the next rally when it's allowed to begin. And it may have started already.
Yeah, I want to get your opinion on that too. So this past weekend, I know several dealers in the industry just haven't been involved with it for so long. I was looking at a wholesaler's bar list, and of course I can't publish it. It's private information, but they were out of 99% of silver. And this is a worldwide wholesaler, a big one that supplies a lot of the bullion companies here in the US. And they were out of most gold as well. And the premiums had started to spike. We got that information Saturday. And of course, when the market opened, we had a nice little bump Sunday night, but Monday morning, the market started climbing again. Do you suppose, is it a combination of them getting out of the short position or moving away from it and the physical shortage information coming to light that's causing people to bid the price up? Or what do you think is the cause for the recent move?
The recent move in price is basically the managed money traders covering short positions. This is all a paper move in the COMEX futures market.
Move. Yeah.
Okay, the thing is that the supply-demand fundamentals have not been allowed to kick in. We haven't had a free market in the precious metals ever, okay? Not in 20 years, 40 years, 50 years. The price of gold has always been set. It was at $20 an ounce. I think the U.S. government keeps on their books at $40 an ounce.
Mm-hmm.
Nobody knows what the true free market prices of gold and silver are because it has never been allowed to trade freely. That's the day that we're all waiting for. And physical demand out there, I'm not surprised that there's nothing for sale or very difficult to get anything. And retail demand is completely controlled by what the private and sovereign mints can produce. Mm-hmm. If the sovereign and private mints can produce X number of ounces of silver, well, the supply equals the demand, because you can't have any more demand than there is supply. And we've seen it several times over the last many years, where we've been up against a wall where delivery times are 2, 3, 4 months down the road. And we're pretty much at that point now where if you want something, it's getting to the stage where, you're going to have to wait for it. Once again, we've been there before, and the next time we go there when prices really sail, it'll be difficult to get silver at all if we ever are allowed to get it again.
Yeah, one last question I wanted to ask you. You often in the past have talked about the dollar index in your columns, and specifically as it relates to precious metals. What in your understanding is the relationship between the DXY and the precious metals? Is there a correlation where they move in opposite directions, or how does the quote unquote strength of the dollar? I mean, we're not counting the inflation adjusted dollar. We're just looking at dollar against a basket of all the other currencies. But how does the DXY affect the gold and silver price? Does it matter at all?
Well, if there was a free market, there would be the as the dollar went up, precious metals would fall, and that would be the price of all commodities, not just the precious metals. Mm-hmm. Okay, but the fact of the matter is that this dollar rally that we're seeing right now, quote unquote, is a run from every other currency into the dollar. The dollar is just what the cleanest dirty shirt in the laundry, as everybody says. But the fact of the matter is this. The bullion banks are using these rallies in the dollar to smack precious metal prices, because if they took their hands off the precious metal prices, even with a dollar index rally in progress, the precious metals would blow sky high anyway. So this rise in the dollar index and the fall in the precious metals is all a smokescreen behind which the big bullion banks and the large commercial traders are going about their business, okay? Because like I said, if the moment they stop shorting this market, these big 8 traders stop shorting the market, I don't care what the dollar index is doing, going up, down, sideways, you're going to see the price of precious metals and other commodities blow sky high. So is there a relationship? In a normal market, there would be. In this market, it's only because the bullion banks and the others are making it. So that's all. Okay.
Any last thoughts, Ed, on this subject, the stuff I haven't asked you, perhaps, that you wanted to add in for the listeners?
No, the only thing is if I was giving investment advice, and I'm not, to anybody, if you haven't bought any silver, if you want to buy some more, the time, despite the fact it's up $1 or so or $2, whatever, from its low on Friday, there's a day is going to come when it's just not going to be available at all, or going to be lead times and the price is going to be through the moon. So my recommendation, and I eat my own cooking on this, is to buy as much as you feel comfortable in affording to buy.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.